Ladies and gentlemen, at the time of recording this video, AMC stock is up about 0.25%. Now, we are going to be having some earnings coming out here as well at the time of recording this video. We're going to talk about those and which ones are important to be watching for, because there are some important earnings still today and after hours. But do not forget, the big story of earnings is really going to be next week, and that's when you can likely experience a lot of volatility. We're also going to have the Fed meeting coming next week. We'll talk about that a little bit here in this video, but we do have some very important data coming out tomorrow, and I want to give you guys my expectations on what that could mean for the markets as well, if things are good or if things are bad. Hit the like button as well as subscribe to the channel. Let me know what you think about this information down below in the comment section. So, as I said, AMC stock is up about 1/3%. To be honest, guys, I've said it before and I'll say it again. I don't expect much to happen until we get a commitment that we are not going to be seeing dilution from AMC. I think AMC is probably the easiest short out there on the markets, period. Even easier than Tesla. Despite what you might believe, because AMC is in a position where they have to raise capital, they have to dilute shareholders, not immediately, but they will have to over the interim period, call it the next 1 to 3 years. You're going to have to see a lot of dilution. And in the nearer term, right, still, near term, next couple of months or so, if we don't get a commitment to not diluting shareholders, we're probably going to get some dilution, and that's probably going to be seen as bad news for AMC, right? AMC stock is too low right now that dilution really doesn't do anything. Like let's just put some numbers to paper here, right? If Adam Aron and AMC want to dilute 40 million shares again, let's say they announce dilution today. That dilution is going to go in at like $3.80 or so, because you always take a haircut where the stock is currently trading at. So $3.80 pretty generous. The stock could fall to like $3.50, so it could be much worse. You're only going to raise $152 million. That literally doesn't move the needle on the over $2 billion of debt coming due in 2026. And then imagine you do that again. You dilute 40 million shares. This time, you're probably only going to get $2.80 per share. You get the idea. Then you're only raising $112 million. So AMC's in a position they have to get the share price higher, and that's a firm reason why I'm bullish right now, because I do think that means AMC stock will rise from here. It's obviously going to be bumpy and there's going to be ups and downs, but unfortunately, AMC really has no choice. Even if they want to dilute their hearts out, they can no longer do that anymore because the shareholders are telling them no, just based on the price action. Shareholders are telling them no. And that's why Adam Aron did acknowledge AMC's share price collapse on his X account. I would be concerned, let's be honest, if we do get a commitment to not diluting shareholders and AMC stock did not rally on that news, right? That would be very much bad news. I'm not expecting that will actually happen, but yeah, if that theoretical situation did happen, that would be not so great. Now, as far as the earnings outlook that will be reporting earnings pretty much right about now, you will have Intel, which obviously important for chips and semiconductors. We did have Lam Research yesterday that reported good earnings, and they guided up there somewhat in the semiconductor space alongside Intel, more on the manufacturing side than anything else, right? They don't necessarily provide GPUs or CPUs like an Intel, AMD, or NVIDIA, but they so just manufacture different components of those processing units. So they had good earnings. Intel probably going to have decent earnings. Now, Visa is an interesting one, because Visa is trading, if you look at the RSI on Visa, it is way overbought. 79 on the RSI. Anytime you've been overbought on Visa, that has pretty much marked a top, and the average pullback over the subsequent couple of weeks has been around 9 to 10%. So, I mean, if that were to happen again, probably not going to be super bullish for the broader markets, right? Visa falling is usually never going to be a positive thing, but we'll have to see what Visa does report today and after hours. You do have as well Capital One and American Express. Capital One reports today and after hours. American Express is tomorrow pre-market. Now, why these guys are important is simply because they show you how the consumer is doing, how they are spending money, if defaults are starting to rise, if people are not starting to pay their credit card bills. So we will have a better understanding of where credit or consumer credit is and how the consumer is actually doing, because these are going to be the guys that start to take losses before other companies do. So definitely want to watch them today and after hours. T-Mobile's just, I wouldn't bet against T-Mobile at this point in time, right? They are taking market share from basically everyone else, and the stock is reflective of that. The stock's hitting new all-time highs basically every single day. Levi's, don't really have an opinion there. Western Digital, they make hard drives, hard storage products. They have an RSI of about 80 something. So I think that one is definitely in a tricky situation heading into earnings as well, with an RSI of 81. Hard to see how you could get more upside in some of these names, but hey, anything is possible. Now, if we take a look at the economic data coming out tomorrow, that's going to really be the big story, because there's very important economic data, probably the most important of all, which is core PCE price index month over month for December. Now, if PCE comes in light, smaller increase than expected, you're going to be sitting at less than 2% annualized, 3 or 6 month wise, core PCE. Now that's going to allow the Fed to have a lot more wiggle room here. The worst possible scenario coming tomorrow would be a hotter than expected PCE report, and that would be bad news, like really bad news for our market. So definitely go ahead and keep that in mind. We're expecting 0.2% on a month over month basis. Odds are it probably comes in less than that, 0.1%. I wouldn't be surprised if it's negative, but you do have shipping costs that have been pretty much going parabolic due to the Red Sea situation. Shipping costs have went from, they're up hundreds of percents. You went from 800, let's call it dollars, it's technically points, 800 points to 2,239 points since October. So I don't know if that eventually causes more inflation, but it's definitely a possibility. We want to be watching for the first signs of that, potentially with core PCE. Now, personal income month over month is expected at 0.3%. I really don't think this matters for the broader markets. Personal spending month over month will matter, because 70 to 73% more or less of GDP every single quarter revolves around spending and consumer activities, right? Specifically spending. So if that data comes in weak, then that could be a problem. You're actually expecting a huge month over month increase compared to last month. Last month was 0.2%. You're expecting 0.4%. Honestly, the higher the better here, as long as inflation continues to be low. That would continue to support the soft landing narrative. You're also going to get headline PCE year over year and month over month, expecting those numbers to pretty much come in line with expectations, 2.2% for year over year, same as last month. Last month was negative 0.1% month over month. Headline PCE, you're expecting positive 0.2%. I don't think that's obviously going to move the market. Core PCE month over month is what is going to move things. 10 o'clock in the morning, I should note that data comes out at 8:30 in the morning tomorrow. 10 o'clock in the morning tomorrow, you are going to be getting pending home sales month over month. You're expecting 1.5%. Last month was 0%. So this is, I think, a sleeping, potential liquidity pool is housing, right? Because housing over the last 18 months, people have not been doing much with it. You see this in the data. Talk to anyone. Odds are most people have not refinanced or bought a new house, especially if they were already homeowners. A lot of people did not go from a 2 or 3% mortgage and upgrade to a 7 or 8% mortgage. Now, first-time home buyers, there's definitely been some activity there, but just not a lot across the board. I'll tell you right now, in each one of my rental properties, I have over $100,000 of equity in them. Am I refinancing? No. Am I selling them? No. Probably not a terrible idea. But No, I'm not doing anything with real estate. Now, if rates were to fall and I wanted to refinance, I could get a lot of money out of my home or homes, right? Not all, properties I would refinance, but that's the point. Is there's a lot of equity in people's homes. So when rates do go lower and people do start to sell homes, people are going to wake up with fat ass bank accounts, for lack of a better word, and start spending more money, and that could fuel another kind of leg of this market. So definitely keep that in mind. There is some positive things that still could be on the horizon when it comes down to 2024. And I think real estate is one of those sleepy ones where a lot of people are not even thinking about what I just said. But if we want to ultimately avoid a recession, I think that is going to be a major component of it. So yes, the data coming out tomorrow will be massively important for our markets, and I do expect quite a large move. Now, the 10-year Treasury yield is currently down about 2.5 basis points today. You were down more than that. If you watched the last video, we were down about 4.5 basis points. So you are starting to see yields going higher, at least a little bit. Still down a lot from where you were in October, but you have started to rise as of recently. Now, the 10 and 2-year yield curve has been slowly and quietly uninverting. You're only inverted 16 basis points now, which is surprising. Stocks are at all-time highs, because when you actually go positive here is when you are on recession watch. That is when you could be going into a recession in the not so distant future. This even happened back in 2022, April. You were inverted briefly and then you went positive. Now, technically you were in a recession by June, right? Technically you had 2 quarters of declining GDP. The government did not declare that was a recession, but that is what did happen. You were in a technical recession in the first half of 2022. Now we're starting to get back to going positive again, and that would put the average start of a recession about 5 months after you uninvert. So if we were to uninvert, let's say in February, that would put the recession somewhere around July or so. July, August or so. And yeah, that is what might start to get priced into the markets at least a little bit, if that does happen. Now, 10-year, 3-month yield curve still very inverted. This is mainly because you'll really start to uninvert once we start to get a lot of interest rate cuts, or at least the first ones. You'll see a rapid uninversion there with the 10-year, 3-month yield curve. Now, as far as the Fed meeting coming next week, no chance of a rate cut. Technically 2.1% chance of a rate cut, but that would be wild news if the Fed did indeed cut rates. Not expecting that at all, though. For March, that's where the toss-up is. Currently, markets are not pricing in a rate cut. We were pricing in a rate cut for a while there. Odds of a rate cut at 52.9%. Odds of a continued pause at 46.2%. So this is actually great news heading into next week, because if the Fed does not want to cut rates in March, they're going to televise that, right? A good thing is markets are no longer pricing that in. So when the Fed says they're not going to cut rates in March, it's probably not going to do much for our markets. Now, the interesting part is we've unpriced the rate cut for March, but you've just priced in that rate cut for March down the line. See, markets are pricing in 1, 2, 3, 4, 5, 6 rate cuts in total in 2024. That either implies inflation plummets. That's why tomorrow is going to be very important. Or it implies the economic activity is going to slow down. Economic activity slowing down, bad news. Inflation plummeting, good news. No matter how many rate cuts we get. So, the more that does happen, the more it starts to look like that, the better off stocks will ultimately be. So I think that is very important. Go ahead and keep that in mind. Now, as far as AMC stock, like I said, the stock's really not doing much of anything. Pretty much flat here on the day, looking to close out the day flat. I think tomorrow is going to be pretty volatile with the data that does come out, and it will be impacting your small and mid cap stocks likely the most. Now, the percentage of stocks above their 50-day moving average, up about 1.96% today to 63.57%. And this really has just been a top heavy kind of market. I've talked about that before, but it really does seem that way here today, with the percentage of stocks above their 50-day moving average, way off of the highs that we were at towards the end of December, but markets basically hitting new all-time highs each and every single day. Magnificent Six, Super Six, whatever we're calling it now, is definitely the reason that things are holding up. Now, as far as your sentiment gauge, you are bearish at 39. Yesterday, you were extremely bullish at 90. Not so great. Message volume has been increasing from 47 yesterday to 50 here on the day today, and the participation ratio is sitting at 42. So really nothing to write home about there as well. Option activity here on the day today in total, pretty dang bullish. 73.79% of the volume was to the call side, and 26.21% of the volume was to the put side. Now, as far as option activity today from hedge funds and institutions, not seeing much of anything. But as I said in the last video, short interest is starting to rise, and I believe this will continue to rise. You're now at 10.32% short interest of free float, $107 million worth of short positions, days to cover 1.37, 25.86 million shares currently sold short, shares out on loan 22.52 million, cost to borrow 1.06%, utilization of 34.4%, and a short score of 57.67 out of 100, cost to borrow max at about 1.35%. So that's the data that you really need to know. We could look at the stock tracker data. It's not moving because the stock is not moving. Still about 10,000 calls in the money, 81,000 calls out the money, 21,000 puts in the money, and 19,000 puts that are out the money. So really nothing to write home about in regards to the stock tracker data as well. The big data will be tomorrow, and that's what will give the markets a large move if we are going to see one. So that's it. Let me know what you guys think about this information down below in the comment section. Are you bullish? Are you bearish? Are you neutral? Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.